Welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing in trade. We will also assess the impact of news flows. Look at the Adani Group stocks. They are in focus. What should your strategy be now after this strong move that continues after the kind of interim report committee, our findings were made public on Friday? We saw the stocks rising on Friday and today they are skyrocketing again. We'll understand more about that. Of course, the big decision by the RBI to withdraw the 2000 rupee note. How does this really impact the markets? Your strategy on the sectors to follow. All of that will also be a part of this show. So do stay tuned. First up, a quick check on how the markets are shaping up at this point in time when we are seeing the markets almost trade at half time. Well, about 0.5% increase for the Nifty. It's trading at 18,289, 86 points up in trade. The Sensex is up by 165 odd points, 61,895. The current levels about 0.3% of an uptick for this index as well. Let's look at the broader markets. The mid and the small cap 100 indices, both of them are up in trade as well. 0.25% jump for both these indices. Let's look at the sectoral action as well. Let's see how the Nifty Bank is performing, for example. Let's also see how some of the other sectoral indices as to how are they really performing in trade. Has there been any impact? We've been listening and reading about all those stories as to how there is some demand emerging as far as gold is concerned, on real estate as well. Let's look at the Nifty Bank. That's seen somewhat of a dip, about 0.3% odd, although there is an expectation that about 50,000 crore rupees, 1 lakh crore rupees worth about deposits could be expected over the next few months in course of the deadline of the return of or the exchange of the 2000 rupee notes is concerned. The FMCG stocks are up by 0.3% odd in trade today as well. Apart from this, the IT stocks are actually soaring high, 1.5% up. That index is really doing well in trade today. Let's look at the auto stocks as well. That's trading flat in today's trade. Let's look at the Adani group of stocks. In fact, they are also among the top Nifty 50 gainers. Adani Enterprises up by 16.5%. Adani Ports up by 7%. Divis Laboratories jumped up in trade today, 2.8% odd. Apollo Hospitals, Tech Mahindra, some of the other movers in trade today as well. Look at this very sharp move on Adani Enterprises, 17.7% of an upside. On the downside, however, you do have some banking names like IndusInd Bank, ICICI Bank down in trade. Tata Motors and Eicher Motors from the auto pack are also lagging behind. Nestle from the FMCG pack is also one of the top laggards at this point in time. But let's welcome our guest on the show. Mr. Vineet Pulinchkar joins in, the head of research from Ventura Securities. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, first up, I want to understand from you the impact on the Adani Group stocks. We have discussed a number of times this space with you on our shows. I mean, amid all the developments that have taken place right from January when the Hindenburg research report came out until today. Now, we've seen on Friday as well, the findings of the interim committee's report were made public, where SEBI and the findings do suggest that there has been prima facie no regulatory failure at this point in time, and we did see the stocks jump up on Friday's trade, and today they've skyrocketed again. What do you see now? How do you see the Adani Group stocks? Is it safe to now invest in Adani Group stocks, or is there still some more uncertainty or some more walls of worry to be climbed going forward?
So, there will always be uncertainty with respect to investing in stocks, right? So, in a perfect secure market, there is no risk and then there is no gain. So, I believe that the risk factors will persist. But, I'd like to make 3 or 4 points which I think are at the bedrock of the post Hindenburg story, and why I think that the valuations are a compelling buy for the sector as a whole for the group. So number one is that the SEBI clearance is coming in, which clearly indicates that there is no corporate misgovernance that took place, right? And the stocks fell purely because of external factors. They're nothing to do with the business. So with the external factor being minimized of risk, I think the stock should climb the walls of worry. Second thing, what has happened is that, in the mayhem that ensued, the Adani debt, which was listed internationally, the management has gone and done certain buybacks, right? So these buybacks have been done at distress levels, and that purely tells you that they will have to pay lesser debt going forward. So to a
Hmm.
certain extent, the leverage has been lightened. Third factor is the fact that there was a lot of uncertainty among investors about the veracity of the business, etc. Because the Adani shot into the limelight very quickly. People did not get a chance to look at them. So now I think, it has gone through a microscope of evaluation of all aspects of the business. And with the, clarifications being given by the group and all is hunky dory, business is sound. And, we are going to see a stamp of institutional investors coming and buying because all the clouds around the stocks have been cleared.
Hmm.
Fourth is valuations of the company are absolutely at distress levels. And finally, the fifth point that I would like to make is that they will now have access to growth capital. They've prioritized allocation of the growth capital. So, the group has emerged even more stronger. So you
Hmm.
have a high growth company in the infrastructure sector with very, very abysmal valuations, making it a screaming buy from this point.
Okay. We've seen the market value cross 10 lakh crore rupees with this today's surge for the group stocks as well. Do you see, and how much upside do you really see for some of the stocks from the Adani basket now?
Have not reevaluated our numbers post the Hindenburg because the management has not been accessible. But
Yeah.
I will tell you one thing that whatever we have seen in the past, we believe that Adani Total Gas, Adani ports are very, very abysmally valued. They are very, very strong businesses, cash flow businesses. So there is nothing to worry about. You're buying them at good dividend yields. If you see Adani Total Gas is available at 1 times debt to net EBITDA, a high growth play in the city gas distribution business, very, very cheap at current levels. So I think this stock has the potential to put on very handsome gains from these levels. Adani Ports is spoken very often. It's a 4 to 5% dividend yield stock with the best of margins globally, and having a enviable portfolio of ports. So I think, and if India is going to increase their EXIM trade to 3 trillion, and if Adani is going to be with their 13 ports in India, they're
Mm-hmm.
going to get a lion's share of that market share. So that's a very, very operating leverage kind of setup. That looks good. If you take the case of Adani Enterprises,
Yeah.
they've there they have prioritized asset allocation, and with their impending IPO, the green energy business will get wings, and that is not discounted in the valuation. So I think that will start playing out. So we will be seeing analysts come up with targets of 4,000, and I will not be surprised. Uh, Apart from this, if you see the other two stocks, Adani
Hmm.
Transmission, it's
Mm-hmm.
a steady compounder story, again growth capital, and the best space to be in the power sector, in
Yeah.
spite of all the woes around the Karnataka freebies that are to be given to the power sector. The transmission and distribution business suffers the least because money is put in an escrow account,
Hmm.
so they get their due always, right? And the IRRs are fixed. You know what money cash flows are going to come, and it's a 92% EBITDA business. But it's a capital intensive business, so they need growth capital for which they're going to make an IPO. Apart from this, when I say IPO, they're going to raise funds. So it could be a private placement or a FPO or an IPO. Finally, Adani Green is among the packs. They have not made much announcements there.
Hmm.
So there we think that they will need to raise very large capital. So that is the least of our, in the pecking order, it would come the last. And at the
Okay.
same time, if you see the infrastructure space, the way it has moved, cement pack has been a lackluster player. So the valuations of infra stocks have gone up. So
Hmm.
we believe that the cement story should play catch up sooner than later.
Hmm.
So that is all my take on the Adani Group, except for Adani Power, which we do not cover.
Okay, understood that. Another piece of news that's important to track today is that Tata Consultancy Services led consortium has now secured 15,000 crore rupees order from BSNL for a nationwide 4G network deployment. Now, this is a huge order. What is your thought on how would this really benefit the IT major and some of the other companies that are already included in this consortium? And of course, looking and understanding that the government may have much more more to extend beyond this 15,000 crore rupees because the government had earlier indicated that there would be about 50,000 crore rupees that would be spent for the 4G network and the expansion in this space by BSNL, and this comes amid Reliance Jio and Bharti Airtel's ongoing efforts to expand their 5G network. What does it entirely mean for BSNL and for the consortium that has won the order?
BSNL, without any doubt, will have to expand. They'll have to modernize, and this order is along those lines, right? It will be the third player in the segment. Of course, there's Vodafone, but Vodafone does not have any growth iterations. So we believe that this order is very positive. The only negative factor out here being is that BSNL is cash strapped. So we have to see how the timely collections happen. But the good thing for the Tata Group is that TCS is a cash-rich company which is now heading the consortium. And from this, the benefits will accrue to Tata Communications as well as to Tejas. So Tejas Networks and Tata Communications, which are now both Tata concerns, should do. This is part of the order. The order expectation was the 100,000 crores, right? We will see how it flows through. So when more orders come and if there is indication from these management that further orders will be coming and this is only part of the order, we will see further price rise happen. But at this point in time, I think most of the growth has been factored into Tejas Networks. So, investors should wait a while before taking positions out here.
All right, understood that as well. Between TCS, Tejas Networks, both of them, how would you really advise investors to take positions now?
I would look at the other PSU company, ITI. It's very cheap. It's very strong. It has got good growth parameters. It's one of the dark horses in the sector,
Okay.
and it's a very, very good play out there. And we think that that would offer much more value than with at the same risk, with a lower risk. ITI is well positioned to benefit from this.
Okay, understood that as well. Well, Vineet, you hold on with us. We will have several bites that we want to share with all our viewers. Of course, it's on the important matter that over the weekend we've all been reading, discussing amidst ourselves, our friends and family, and to understand what is the larger implication. And I'm talking about the 2,000 rupee note withdrawal, the decision that was taken by the RBI on Friday. And after that, there has been a lot of discussion and debate on that. Now, speaking on this issue, we've had the DEA Secretary Ajay Seth talk to my colleague Karishma Sudani and explain what will be the implication on the economy going forward from here.
The fact that you have asked people to deposit and exchange it with smaller denominations until September 30, does that impact financial transactions or cash flow in any way?
So the RBI has introduced this matter as a part of their clean note policy, and it will not have any impact at all. In fact, it will be neutral as far as money supply is concerned. One can deposit now and withdraw it the very next moment or next day, as and when the money is required by them. And those who want to exchange it without depositing it in their account at a time, they can exchange it for a smaller denomination for 20,000 rupees, and they can do it several times in a day. So we don't expect any impact on the economy at all, because it is a money supply neutral measure.
Sir, and the fact that suddenly there's so much of liquidity in the system because of the RBI surplus and because of your 2,000 rupee coming into your system, do you see any impact on the market? Do you see your cost of borrowing going down?
See, the objective, as stated very clearly by RBI, is a clean policy. These notes were issued more than 5 years back, and so that the clean notes are available to the public. That is the objective. There is no other objective of this exercise.
All right, so there you have the DEA Secretary really clarifying that the objective of the withdrawal of 2,000 rupee notes is to only have clean notes in the system. It may not have any impact on the supply, also on the exchange of this currency for other currencies. He's clarified that a number of times during the day, people can go to the banks and exchange these notes as well. Apart from this, we've also had the RBI Governor Shaktikanta Das really talk about and explain the reason why this has been done. Let's listen to what he had to say earlier.
Tender we have clearly explained in our press note that these 2000 notes were primarily issued for the purpose of quickly replenishing the value of money which was being taken out from the system when the 2000, the then prevailing 1000 rupee notes and 500 rupee notes were what is called when their legal tender status were withdrawn. So that time the 2000 rupee notes were introduced with a specific purpose, with a primary purpose, let me say, with a primary purpose to put back that much value into the system. And a decision was taken to adopt 2000 rupee notes because if you do, currencies of lower denominations, in the same amount of time required for printing with the same paper, with the same capacity of printing, you could have only printed lower value of currency. So 2000 means higher value of currency was printed and supplied. So it was introduced with the primary purpose of replenishing the currency which had been declared, currency in the context of the 2016 November measure, which was undertaken by the government at that time.
All right, so there you have the RBI governor clearly talking about why the 2000 rupee notes were actually brought into the system, and they were brought into the system as a replacement currency because the 500 and 1000 rupee notes were getting demonetized in the year 2016, and they wanted the maximum supply to ease the concerns for the public, and therefore for them in the shorter period of time to be able to print a higher denomination currency note was the best thing possible, or the decision possible, which they have done. And of course that was the objective that was also met. We also spoke to the SBI chairman Dinesh Khara earlier when he was talking to us about the Q4 numbers. He did talk to us about the 2000 rupee note withdrawal and what he thought of the decision of the RBI and what is the likely impact going to be. Listen into that as well.
The real point that I want you to explain to our viewers, it's clear that anyone with any amount of 2000 rupee notes can deposit them in one go. The exchange has been limited to 20,000 rupees at a time. Now, it's not very clear whether that at a time is per day, or can a person queue up again and again at the same branch or go to a different branch for exchange. I know it is a little early. The implementation is going to start on the 23rd. What can you tell our viewers about how this process will pan out, and what will SBI, as the largest bank, do in this regard?
We are also in the process of firming up our stance in terms of what should be, what we should interpret out of in one instance. So we are also seeking the viewpoint of the regulator also in this matter. So once we have a clarity, maybe today, tomorrow, then we will be accordingly will be practicing it on ground too.
But there are obviously going to be no concerns around shortages of the 500 rupee denomination note, Mr. Khara.
No, I don't think so, because as I mentioned that significant part of the transactions are now being handled by UPI. So whatever currency is there, yes, of course, some augmentation will perhaps be required, but I think to a greater extent, the currency need for exchange, that will get addressed through the UPI mechanism. And of course, people who hold some currency as a store of value, for them they might be looking for the alternate options, which could be the currency in the other denomination too. Because as I mentioned that even now, from 2019, this 2000 rupees currency note printing was stopped, and gradually the proportion of the 2000 rupees currency note in the total currency was coming down, and it has come to a level of from somewhere around 50% in about 16-17 to it has come to a level of about just about 11%. So that very clearly means that there is going to be it's going to be a digital economy, and physical cash may start losing its relevance at a point of time.
All right, so there you heard Mr. Khara talking about that, UPI has really taken over the higher denomination transactions, and therefore it may not really have an impact. And this is the era when we are actually moving towards a digital economy, so it won't have too much of an impact on the larger economy. Vineet, let me come to you. You did hear the DEA secretary talk about the decision and what could be the potential implication of that. You heard the RBI governor explain it, and we've also had the chairman of the largest bank in India talk about what his thoughts are as far as the removal of the 2000 rupee notes are concerned. Your own sense of would it really have an impact on D Street, on traders, on the investors community, and how should the investors really view this move?
So we just need to understand the modus operandi of what has happened. First thing is that traders are not accepting 2000 rupee notes, right? So effectively, in reality, they become toilet paper, and it is only being acceptable at the banks. Now, will it create liquidity in the system? So what is going to happen is a lot of the 2000 rupee notes which are out of circulation, which is speculated at about 3.6 lakh crores, is suddenly now going to come to the system. Obviously, what is going to happen is that they're going to be replaced with the 500 rupee notes and taken back, right? Now, theoretically, you will say that, this money comes in and it goes out. But I believe that some of it might come into the system, and consumer stocks will definitely benefit. So that will be the
Okay.
immediate effect next 2 years, 2 quarters. And you have to remember that we are going to election season, and election season there's a lot of money that chases votes. So we are going to see over the next 4 months a lot of money chase going into rural and retail hands, and that is going to be very, very good for the consumption story. So I'm expecting consumption stocks to do well from this. But really, the major implications of doing away with the 2000 rupee notes, as was stated objective, was to provide immediate relief when the demon was impacted in 2016. Okay, now if you consider US and UK, the highest notes that are there is a 50 pound in the UK and about $50 in the US. These are the most frequently used denominations. There may
Hmm.
be a larger denomination notes, but these are the ones which are generally used. So you can understand that for an economy like the US and UK, which is not as digitized in terms of payments as India, right? Where the relevance of high denomination has been extinguished. It makes no sense in a country like ours, which is booming so much, and where the increasing digitization is happening to have the high transaction nodes. So what is going to happen is that the parallel economy, the black economy trade where this money is being stashed is getting out of the system. Two is it is going to clean up the system, whether we like, to a certain extent, not completely. And one of the major and the most important facts is that today Pakistan is the global counterfeit currency industry, right? And to dissuade them from pumping in money into the Indian economy, with the elections around the around the corner, these decisions have been impacting. And we have to not forget that in August, we are going to be seeing the introduction of the BRICS digital currency. So this BRICS digital currency, which is going to come in, is going to usher in an entirely digital economy
Hmm.
where the presence of physical currency is going to kind of diminish.
Hmm.
And just as we saw RBI withdraw the 2000 rupees notes over the last 7 years, after injecting into the system, we will see the reduction of the 500 rupee notes also happen, but
Okay.
at a much faster. I think it could happen by 25, 26 as the CBDC gets more,
Okay.
uh, you know,
But does that also bring in any opportunity for investors? Say, look at the opportunity of what will happen over the next 3 to 4 months when people go out and exchange their 2000 rupee notes for or maybe deposit their 2000 rupee notes. There is a wider expectation that about 1 lakh crore rupees of deposits are expected. Should investors be really looking at banking stocks? So we've already seen fundamentally they have been performing well, but would that this liquidity gush further provide impetus to the stocks? What happens to the gold stocks, for example? We've been hearing about people rushing to buy golds. The jewelers are expecting some demand. Real estate, again, there is huge booking enquiries over the last 2 days itself. And of course, with this kind of a deposit and with this kind of a buying power that now investors will be looking at, does that open up any opportunity for the Indian investors in the stock markets?
Yes, definitely. So, if you look at the public sector banks, their valuations are pretty abysmal. Second is, we are at the threshold of interest rates kind of coming off. It's debatable at this point in time because RBI has not guided much of that. But, if the deposit situation improves, it'll be very good for the banking NIMs and overall they will do well. And I expect the PSU banks to perform much better given their, very, very benign valuations. So that is a play there. Look at high street consumer stocks like Ethos, which is for watches, or you look at Titan, Kalyan Jewelers, Goldium International, which is for diamonds, artificial diamonds. So these are the stocks that will definitely do well. As a flip to this, the other stocks which can do well are the Muthoot finances, the gold financing companies will
Okay.
do well. So this is that entire space which is going to definitely get a flip from the uh, the
Right.
extinguishing of the 2000 currency.
Got that. Well, okay. Thank you so much, Vineet, for being with us and discussing with us all the opportunities that exist for the Indian investors with these current news flows and what should be the entire strategy that they should adopt at this point in time. Always a pleasure having you with us. Well, Sensex is up now 181 points. The markets are building on to that momentum. 90 points up for the Nifty as well. 18 to 92. About half odd % of gains coming in. Larger markets or the breadth of the market still tilting towards the positive. A whole host of pockets that are showing an uptick with these news flows. We'll continue to track the market movement for you, and you can do that too by being with us on Business Today TV. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms to catch more about how the markets may move going forward and how would your investments get impacted in these trades. Many thanks for tuning in.